Hi, this is Mark Fleming, President of Signature Closers. Today I'd like to take a few moments of your time to review a sample closing disclosure form. The closing disclosure will come into place on most loans originating on or after October 1st, 2015. The closing disclosure will replace the current HUD-1 settlement statement as well as the truth in lending by combining them into one form for the borrower to review at the closing table. Today we're going to review a refinance transaction with a typical loan closing disclosure form. You'll see the top of the form includes information about the date of issue, the closing date, disbursement date, who the settlement agent is, file number, property address, as well as borrower specific information and loan information. The rest of the form looks very similar to the loan estimate form. You'll see the loan amount, the interest rate, the monthly principal and interest, and whether those amounts can increase or not after closing. You'll see a prepayment penalty and a balloon payment, and if this loan does possess those features. You'll see projected payments to include a principal and interest breakout, mortgage insurance breakout, and estimated escrow, as well as a breakout of these costs in years 5 through 30. In the event that you have a loan that obviously is going to change rates, it may be an adjustable rate mortgage, you would expect to see a different payment projected out as time goes on. And then you'll see estimated taxes, insurance, and assessments. Talks about what those actually include. So you see $356.13. You have property taxes and homeowners insurance, and you'll see that those are included in escrow. However, your homeowners association dues will not be included in escrow, and so it would not be included in your mortgage payment, but it does get included in this section here. You'll have a cost at closing. So closing cost, you'll see $5,757.57. And there's going to be some forms here in a little bit that break that down a bit further. And then your total cash at closing. So in this case, $29,677.43 will actually be coming back to the borrower as a result of the refinance. This form looks very similar to our HUD-1 settlement statement today. You'll notice Section A includes all origination charges, so the application fee, your origination fee, underwriting fee, etc., all rolled up into Section A, the origination total. Section B is services the borrower did not shop for, so typically this would include an appraisal fee, credit report fee, flood determination, and other closing fees. Services the borrower did shop for is going to include most typically your title insurance services, and in this case includes a pest inspection fee. And you will see there's a space for paid at closing and then paid before closing as well. Section D totals the loan costs that the borrower has paid, and it also breaks it out into a subtotal showing paid at closing as well as before closing by the borrower. As you scroll further down the page, you'll see Section E would be taxes or other government fees, so recording fees would be included here. You'll see $60 for the mortgage. Prepaids typically includes homeowners insurance, mortgage insurance, prepaid interest, property taxes, and you'll see those roll up to the total for Section F of prepaids. Section G includes your initial escrow payment at closing, so your homeowner's insurance, mortgage insurance, and property taxes, typically set aside to build some type of base or reserve in the escrow account. That's all rolled up into Section G. So you'll see the total other costs, Section I, is going to be the total from Sections E, F, G, and H. And in this case, that totals $2,762.07. If you look at Section J, the total closing cost paid by the borrower are going to be the totals from Section D and Section I. So you'll notice that it's $5,822.57 paid at closing, $435 paid before closing, and then there's a lender credit applied against what that total would be of $500 to reduce their closing cost to $5,757.57. The next page shows payoffs and payments made on this loan. So in this situation, you'll see that there's a payoff of an existing loan of $115,000 totaled in Section K. Finally, when calculating cash to close, you'll see that there is a comparison between the original loan estimate and your final loan cost. The loan amount of $150,000 remains unchanged. Total closing cost, you can see here that they're slightly higher than projected at $5,757.57 versus the $5,099 projected closing cost. You'll see costs paid before closing, and then you'll also see total payoffs and payments of $115,000. So in this situation, the total cash to close is actually going to be an amount paid back to the borrower in the amount of $29,677.43. There's additional information about the loan on this form, such as whether the loan is assumable or not, and whether there's a demand feature on this loan or not that could require early payment or early repayment by the lender. Talks about if you have late payments, what that would be if it's more than 15 days late, and what the late fee is. If there's negative amortization, on this loan, if partial payments will be accepted, if your escrow account is set up, it shows a breakout of what will be included in year one, what non-escrowed property costs happen over the course of the first year, which in this case would be potentially your homeowners association dues. It's going to show your initial escrow payment as well as your monthly escrow payment. This form is going to have a breakout very similar to what the Truth in Lending shows today. Total of payments, you'll see here the total you've paid after you've made all payments of principal, interest, mortgage, insurance, and otherwise. Your finance charge, which is basically the dollar amount the loan cost you. Your amount financed, which is the loan amount available after paying your finance charge. Your annual percentage rate is your total cost broken out over the course of the loan term expressed as a rate. This is not the interest rate. It's very important to point out to the borrower. Sometimes they see that number and they want to know, well, why is that different than my interest rate? Well, it basically includes your cost, closing cost and otherwise built in. Your total interest percentage is going to be a number that shows you the total interest divided by the actual loan amount over the loan term. There will be some other information provided on this form in regards to your appraisal, liability after foreclosure in the event you would unfortunately have a foreclosure, as well as contact information for the lender, the mortgage broker, the settlement agent. You'll notice there's a space for an applicant's signature and a date, and obviously that needs to happen at closing. And we're still in the process of determining whether a non-borrowing spouse will have to sign this document or not, which we will let you know as soon as we know. Below, we've provided a link to additional training available through the National Notary Association that we would encourage you to utilize to further your education and your growth in this area. If you have questions or comments, please feel free to contact us at any time. We're here to help as you continue your growth and education with these new changes. Please keep in mind this closing disclosure form will replace the HUD-1 settlement statement and the Truth in Lending form at the final closing table for most loans originating on or after October 1st, 2015. Thank you again for your time and have a wonderful day.